All right. Happy Affordable Friday, everybody. And technically, good afternoon. So on behalf of the NYMBA, President Jeff Pinard and our entire board and my Affordable Friday co-chair, Sherry Eccles, I thank you for joining today's special webinar with our partner, Jennifer Jackson from USDA Rural Single Family Division. Before we get started, just a few quick housekeeping notes. If you experience any technical difficulties, please use the chat box to notify us. During today's webinar, all lines are muted except for our presenters. There will be an opportunity to ask questions. Please use the chat box to ask those questions, and we'll do our best to address as many as we can during the Q&A session at the end. We'll be sharing the presentation slides and relevant resources with you after the webinar, so you'll have access to that. Also, we encourage all mortgage professionals to join the national or the MBA's Mortgage Action Alliance. It's easy, free way to stay informed on legislative issues that can impact the way you do business. So now I'm happy to turn it over to Jennifer with USDA as our today's presenter. Jennifer, if you want to just give us a little bit of background on your experience in lending and this industry and have fun with it. Thank you.
Absolutely. Thank you, Brian. And thank you to the entire Mortgage Bankers Association for inviting me here today to provide an overview of USDA and the housing programs that we provide and offer and partner, in fact, with many of the lenders that are here today as part of the audience. Just a little bit of background about me. I've worked for USDA Rural Development this is my 32nd year. I started when I was in college as a student intern. My roots come back where Joe's roots are, in Norwich, New York. I worked at a field office while I was in college at Binghamton University in Norwich. We had a field office then. We still have a footprint in many counties throughout the state. But after I graduated from Binghamton University, I worked my way up through the ranks as a housing specialist, both in multi and in single family housing. And probably 20 years ago I took over the position as the single family housing program director out of our state headquarters here in Syracuse. And that's where I work out of. As we go through the presentation, you'll see that we have various field offices embedded throughout the rural areas of New York. I've worked in several of those offices, but I've been here in Syracuse for over 20 years. This is the headquarters. We're a federal agency. This is the headquarters of the agency. But again, we have these various offices deployed throughout the state. So most of my career, I have been working and supporting housing in the federal side with USDA Rural Development, but there was a brief period, early 2000s, where I did take a brief departure, and I worked as a mortgage lender or an originator. I won't say the lender's name because I just don't want to show preference, but so I do have some private sector mortgage experience. I was able to draw on that and try to develop our single family housing program here in Syracuse with some, industry models and practices that would hopefully make us a little more efficient. And I think over the years we've done that. So that's a little bit of background about me. I'm going to begin the presentation. I'm going to focus on my presentation here and take me off the camera, but I will be back, when we do our Q&A. So a little bit about USDA Rural Development. Oh, there we go. So for many of you lenders that are here today, that you might be familiar more with USDA, the Single Family Housing Guaranteed Loan Program. So this presentation today is going to introduce you to a couple more of our other home purchase and lending programs that we have available here at USDA. For others, you may be completely unfamiliar and surprised that the Department of Agriculture is in the mortgage arena. A lot of people, when they think of USDA, the first thing that comes to mind is probably not mortgage lending. They might think, Smokey the Bear or meat inspections, or maybe farm agricultural lending or food stamps. But in fact, USDA has been in the lending arena, the residential mortgage lending industry, for over 75 years. You'll see that we've been doing this since 1949. Most of the programs that we're going to talk about today, our flagship housing programs, they've been delivered through our portfolio for most of this time. So our role and mission, many of you will think, well, what is the Department of Agriculture doing in residential mortgage lending and in the housing arena? The whole purpose is we want to increase opportunity, economic opportunity, and improve the quality of life of people in rural America. So if we prop up housing, we prop up business, we prop up community development through different municipal and not-for-profit lending, we're supporting rural communities with financing opportunities that are a little bit more affordable in these areas. So specific to housing, which we're going to talk about today, we do this by financing well-built, affordable, and energy-efficient housing. And we also repair housing in rural areas. And to give you just a little bit of a scope, last fiscal year, 23, in New York alone, this is a national program, but here in New York, our footprint, we assisted over 775 families by providing just a little over $75 million in direct loans, grants, and loan note guarantees. So as I mentioned a little bit in my introduction, you'll see that, yes, we are a federal agency.
Jennifer, did we lose you?
These, oh, are you there?
Yep, we got you back.
Oh, I must be a Wi-Fi thing. Sorry about that. You can hear me okay now, right?
Yep, we're back on track. Yep, thank you.
Okay, perfect. So as you'll see here, these area offices are embedded throughout the rural communities of New York that we serve. These offices deliver our housing programs. They also deliver our business programs and our community development programs. We're not here to necessarily talk about the business and the community development programs, but just know if you visit our website, it'll talk to you. We do, fire loans, we do infrastructure loans, we do water lines, sewer lines, broadband, rural libraries, rural hospitals. So beyond housing, we touch in a lot of different areas of rural and economic and community development. So these are the contact points for each of these offices if you're interested in housing or even any of the other business and community development programs that we have to offer at USDA. So our focus today is to give you an overview and idea of the housing programs that we have to offer, both in direct and guaranteed lending. We also have some grants available on the home repair side. These are we have other single family housing programs in our portfolio, but these are kind of the flagship programs that most people, when they're aware of USDA and our housing influence, they're familiar with these three programs, which is our 502 direct home purchase program, our 502 guaranteed loan program, and our Section 504 home repair program. So first, let's talk about our 502 direct single family housing loan program. This is more geared for low and very low income individuals or households or families that are looking to purchase a home in a rural area. As a rule, these folks are generally not bankable. It's not that they are necessarily a first-time home buyer, but they might lack the down payment. They may lack the repayment ability. They may lack, the cash reserves that would traditionally put them into a bank financing or even other government-backed programs, to include our own government-backed guaranteed loan. So we're here to help those folks that ordinarily would not qualify through you folks. So you should keep this in mind as a possible referral option. If you're trying to qualify someone and the ratios just don't work or they don't have the down payment, this would be a great opportunity to refer them to USDA to see if we can assist them and get them into home ownership. It can be to purchase an existing or to construct a new home in a rural area. And the key defining feature of this program that sets us apart from a lot of other mortgage products is we do not require a down payment. We can finance up to 100% of the appraised value. We do not require private mortgage insurance because we are self-insured as the federal and government. But what's the most unique feature is this subsidy, this payment assistance, which we can provide to a household that qualifies to bring down the interest rate to feel like 1%. Like right now, our interest rate is 4.625%. That is the note rate. That is what they will sign at closing. But a family may qualify for a subsidy on that rate where the government is paying the interest differential between 1% and, in this example, the rate now 4.625%. So as you can imagine, that goes a long way with making a family that would normally not qualify for a mortgage be able to qualify for a mortgage, because we're amortizing these over a longer term, 33 years, 30 for a manufactured home. So I do want to disclose that. But if you spread it over 33 years, you subsidize the interest rate for the qualifying households, you don't require PMI, and you loan up to 100% loan to value. As you can see, that's a game changer. That's someone that wasn't going to get a home through a different, maybe bank product or other government product, and get them into home ownership, particularly in this case in a rural area. The property has to be modest. So, we're not here to compete with our sister agency, the Farm Service Agency. They do the agricultural lending. These are single family homes in modest sized lots that cannot be used for income producing purposes. So we can't do duplexes. They can't contain outbuildings that are used, for maybe agricultural purposes. And it can't have a value that exceeds our loan limit for the area. But I can tell you that our loan limit for the clients we serve is very generous. The loan limit is up to 80% of the HUD median, which when we're dealing with the lower income folks, we rarely bump up against that limit. Some markets we do, particularly downstate, but for most areas of New York, we don't come near that loan limit. Their repayment ability will typically cap them out. So what's the catch? You're like, oh my goodness, this is great. I've got a lot of clients that I just can't get them to qualify, and I could send, some folks your way, Jennifer, and we could, hopefully help them, even though, maybe they're not ready to go through a traditional mortgage product. The catch is they just have to be in a rural area. They don't necessarily have to currently live in a rural area, but they would have to be willing to purchase in a rural area. And this website is something that you would really want to bookmark and keep as a reference, both for the direct, the guarantee, and our home repair program, because this takes the mystery out of where are those USDA rural areas? What constitutes rural? So as you can see on this website, if you just click property eligibility, you'll get a map of the entire United States beyond New York. I've just zoomed on this screenshot of New York so that you can see, you can see a little bit on this screenshot, but the areas that are a little more orange in color: Rochester, Buffalo, Albany, New York City, maybe Ithaca, the city of Oneida. Those areas are considered non-rural areas, but most of the state, as many of you know, is considered rural. People outside New York don't realize that, but those of us here, we do understand that the bulk of New York State is quite rural. So we can loan in a large concentration of upstate New York. Downstate, it's a little more of a challenge, but certainly upstate, there's a lot of places where we can provide our loan and grant assistance. So I just gave like a little demo on the slide here. This is actually the address of our area office up in Canton. So when you type in the address and you hit go, in a matter of seconds, it'll tell you with that little pin whether the address is or is not located in a rural area. And again, this is the same for both the direct, the guaranteed, and our home repair program. Same rural areas apply for all three programs that we're going to talk about today. So you're like, okay, I've got folks that I think would be phenomenal candidates for this program. I really want to help them. How do we start? Well, we have, which is kind of like an online version of a pre-approval. It's an online assessment tool where folks can go in, self-serve. They enter some basic data about it's stated income, obviously. It's stated information about their credit, where it helps us to get an idea of what is their income, what is their household income, what is their maybe their repayment income, because household income may be different from the repayment income. Our programs, we have to look at all people in the household that generate income, regardless of who might be a party to the note. So this helps to slice and dice that a little bit. And it gives them an idea of where they stand maybe before they go through the full-blown application process. And it helps them determine maybe a rough repayment amount that they have, factoring the potential subsidy that they're going to receive as well. Now, just like a pre-approval, it's not binding. They have to apply. We have to have third-party verifications, but it gives them a good idea in advance where they stand, what they might need to work on. And we also go one step further where we provide counseling to these customers. So when we deploy the online assessment and they reach out to us, we give them some counseling with one of my staff here in Syracuse, so that, you know, maybe we go into a deeper dive. We say, okay, where are you looking to purchase your home? We plug in a little more accurate tax and insurances for the escrow, because maybe they don't know what to put in for taxes insurance and they've overestimated it or underestimated it. So we add a counseling piece to this before they apply, but they do not have to pre-approve. They can go straight to application, of course, if they wish to do so. And any of those offices that I provided the map to, they can contact anyone in those offices to go straight to application if they didn't want to do the online assessment. So that's just a high overview of our 502 direct loan program. But, you know, we do have some folks that are like, oh my goodness, like I really want to take advantage of this no down payment program. I mean, you know, I'm just starting out with my career. My income's a little over than the low income limit, but I really don't have the cash reserves to maybe go conventional or even FHA. So what's out there for me? And so we do have a guaranteed loan program that's geared for a little bit higher incomes, more middle income families, but we can serve many low income families through the guarantee program as well. And for those of you lenders that have worked with our guarantee loan program, you'll know that the income limits are pretty generous of what constitutes low income, because they're banded, and also generous of what's considered guarantee as well. So this is our partnered program with you all. This is where you all help us to originate, process, underwrite, close, hold, service the loan through the life of the loan. We're just here as a safety net with a low note guarantee, just like maybe a Sunny Mae or an FHA or a VA loan, that in the event of a default, that we're going to guarantee the lender up to 90% of their original investment, as long as they underwrite it to conform with our underwriting guidelines. We can't, but you can, and we will guarantee it. We will finance either new construction or existing. You can even treat it similar to like maybe what you're familiar with a 203K loan, where if you have, maybe there's limited housing stock and you want to order an as repaired appraised value and you want to set up an escrow, you could do that as well. And you could still finance up to 100% of that and administer that escrow. So that's an option as well, which might be desirable in this market where there's not a lot of great housing stock out there right now. And the key thing is you could market this as it's 100% loan to value program. You can finance up to 100% of the appraised value, and the upfront guarantee fee of 1% that can be financed into the loan above the 100%. So this truly is a no down payment required product. So it's particularly valuable right now where, maybe folks are cash strapped, they don't have a lot of savings, and this is an option for them. So where to start? We generally direct our clients when they call us about this program in our area offices. We love to talk with our customers. We want to assist our customers directly, but in this instance, we have to send them to you all, our partners. We want them to go directly to you where they would get their pre-approval. Most of our lenders, you know, they're doing pre-approvals all the time. So they're going to provide typically a pre-approval for the guarantee program as well at no cost, and help them decide what is the best mortgage product for them. So obviously, we're proud of our program. We think this is the best program and option for them. But you, as the lenders, the experts in your field, you might, know of something different in that area or something that might be more beneficial to them. So we want you to counsel them. And then hopefully, if the decision is to utilize the guarantee program, you're going to originate the application, process it, underwrite it, close it, hold it, and service it for the life of the loan. We on our website maintain a list of all of our approved lenders, and they also differentiate with our national team who their more active lenders are, so that folks can go drill right down to who are the active participants within the guarantee program. So for those of you that either utilize the guarantee program right now, or you're thinking about becoming a lender that has this in your product portfolio, this is a great resource. It's also available on our website, which I can give you all a demo afterwards as well. But I tried to put this on the slide because it has all the email addresses, the web links of where you can reach the people within this team that need to get you all started, the training you need, maybe the first steps to become an approved lender. Everything is really a one-stop shop with this contact sheet. For Joe and even Sherry, who are familiar with the guarantee program and may have utilized this in the past, you'll know that just a few years ago, this was administered locally here within the states. So training was provided locally. We had staff that did the file reviews, issued the loan note guarantees. But within the past few years, this became, just for efficiencies and consistency, they nationalized this so that we have regional teams that review these files. But they do answer questions over the phone. You can send them an email, and they have various production teams, as you'll see here regionally. So we don't administer it locally directly, but my staff here can get you certainly the support and the contacts you need, but you should be able to shop and self-serve most of the help and the support you need on our website or through these websites. So these are a few of the key links that I thought would be beneficial to you all as the lender on our lender page. We have a training and resource library. They have videos. They have live sessions that you can sign up to attend. So if you're interested in more of like a live session, but maybe there's not one coming up for a couple weeks and you want to listen to a recorded one, you can do that as well. They'll go over a variety of topics like how to analyze credit, how to submit a request for loan note guarantee, or how to request a loss payment. So all of, whether it's origination, servicing, they have a lot of self-serve tutorials on their website. But the live training schedule, I personally like live training, so I would probably recommend looking into their live training schedule as well. The handbook is actually quite user-friendly. I'm not one to suggest people read federal regulations. They're not easy to read usually, but our handbooks, I have to say, are quite reader-friendly. That's the link to that handbook. They have chapters on credit, repayment ability, ratios, how to become an approved lender. So that link is there for you as well. And I would also recommend that you sign up to our Gov delivery. Every time there's a handbook change or a regulation change, or maybe a funding notice, something that's an important alert, you will get that notice sent to your email, and you can set the frequency of those alerts as well, so that you don't get inundated with information. But they actually are quite good with not just sending something to you every day and inundating your email. And then they have an FAQ document on there. It's a very good. It kind of drills down to maybe some of those key questions that you want to know about credit, repayment, that sort of thing. That's also on that website at that link. So I've talked on the home purchase side of things about the two flagship programs that we offer. But beyond the dollars and the budgets and the statistics that often become the focus of my job, my staff and I, we really do try to make a point to focus on the families that are behind the financing. And these are just a few of literally thousands of the success stories that we featured and that we have every day when we do our job. So, if you could just let me indulge a bit and tell about the stories of these families that we featured at different times, for Home Ownership Month, or maybe a feature story. This family on the left, the 6 children, for those of you that might know what I'm referring to, those little air fresheners that are in your car, that look like little Christmas trees. Maybe you didn't know, but that factory that makes those air fresheners is up near Watertown, New York. And these kids here that are featured, their dad works in that factory. So he was a single dad raising these 6 kids in a single wide trailer before he contacted USDA to give him the mortgage assistance that he needed to build this new home that's featured behind them. So you can imagine how difficult it would be as a single dad, mom, anybody, even a married couple, raising 6 children in a single wide trailer home. So, he was so proud that he could actually create an environment where the children didn't have to sleep in the living room. They could have a few of them their own bedrooms, or the girls could share their room. They could be house proud. They could invite kids over for sleepovers, that sort of thing. So this is just, it's a story, it's an example, but literally we do this thousands of times a year with our program assistants. These 2 families up in the upper right and in the center, these are up on the St. Regis Mohawk tribe. For those of you who obviously may or may not be familiar with tribal lending, it's tough to do mortgage lending up on tribal lands. They don't have traditional ownership. You have to go through tribal court if you ever want to foreclose or do an eviction. So we're a lot of times the main game in town up there for anyone that wants to build a new home. And we've set up alternative lending models up there. So these are just a couple of the new homes that we financed up on the St. Regis tribe. And the family in the center, they were actually featured in the New York Times just a couple months ago as a result of our assistance. So, I would encourage you to read that story. But the mom in the middle, her and her husband, they started the application process with USDA a little over a year ago. Actually, it's been a year and a half now. And he was a chef, and they designed their new home with the kitchen in mind, because that was very important to him, to have a great family gathering place. So we closed on the loan in the fall, and we were going to start construction in the spring. And in that time period, very sadly, Dad passed away very unexpectedly. And Mom, Randa, she was actually deciding whether or not she should continue on with the loan, because it was just such a devastation to the whole family. But the kids said, Mom, Dad would have wanted this. We're trying to make a better life for ourselves. And she pushed through and she built this home, and we did a tree planting dedication ceremony. And I asked if they could have somehow Dad involved in in the event, which they did. They had that great big picture that they brought and provided to showcase as part of the family photo. And, you know, it got a lot of attention because of the challenge that this family faced. And like I said, they were featured in the New York Times. It was a big homeownership month event that was recognized by the Secretary of Agriculture last year. And then this family to the right is quite literally her sister. They are neighbors. They live on the same road, and they're featured on a national brochure. So it's a New York family. It's a tribal family that we're really proud that we could put on a national brochure and feature New York and put New York on the map. So like I said, I just like to tell a little bit of a background of these families because it truly is changing lives one home at a time. So I'm going to pivot a little and talk about our home repair program, which is just that. It's geared more towards rehab repairs. We will do these standalone. Sometimes we partner with various not-for-profits to make their funds go a little bit longer and further in rural areas. And these to assist very low income rural homeowners to make repairs to their homes. And it can include accessibility modifications for individuals with disabilities. So it can either be to repair or to make the property accessible. So some of the highlights on the 504 home repair loan program, it's unlike the grant program, which we'll discuss in a minute. We can pretty much do anything to improve or modernize the home with the loan product, as long as they're in the very low income category, own the home and the land that it's situated on. In the case of maybe, you know, a trailer home, like we can't do homes in trailer parks where they don't own the land and the unit. We can also do energy efficiency measures to help reduce their utility costs. The maximum outstanding 504 loan is $40,000 and it's fixed at a 1% interest rate and it's spread over 20 years. So you lenders out there, you know that that's a very small and affordable payment if you take a 1% loan and you spread it out over 20 years. So we structure it that way because we are assisting very low income families and we want to make it affordable. The total debt ratio for this program is it's just capped at 41. We don't have a front end ratio. We just have the back end ratio. And of course, we can look at non-traditional credit histories if maybe they don't have established credit. Sometimes we get seniors that they cash and carry a lot and they don't have a lot of a credit history that's already established. And what's particularly attractive to seniors, mostly because at this stage of their life, they don't want a mortgage on their houses. We don't even file a mortgage unless it's $7,500 or more. So anything less than 7,500, you know, maybe they need a hot water heater, maybe they need, you know, a few windows that need to be more energy efficient. We can do a no only if it's less than 7,500, no lien on their property. The grants are structured a little bit different because it is just that, it's a grant, there's no repayment on it. And the lifetime assistance for the grant is $10,000. At least one applicant and owner of the house has to be 62 years of age. And these have to be used to address health and safety. So you couldn't just remodel a kitchen with it, or you couldn't do something like new siding unless there was something that was health and safety related to the current siding. So it has to address health and safety or make the home accessible for members of the dwelling that have disabilities. We just have them sign a grant agreement. There's no lien on this program as well. And it's largely on the honor system that they will reside and own the home for 3 years. Otherwise, they'd have to pay back the grant. So again, very much appreciated by the seniors because at this stage of their life, they often do not want to put a lien on the property. So the eligibility guidelines, that they have to be in the very low income limit versus the low income. As we've discussed, the 502 direct program is geared for low income, which it's not a hard rule because we banned the income limits, but it's roughly around 80% of the HUD median income level. The guarantee program is geared more towards middle income program participants, but the home repair program, you have to be very low. And again, it's banded. It's not a hard rule, but it's roughly around 50% or less of the HUD median income level. They must own the home, the site, and occupy the property. They can't be seasonal folks like live in Florida for part of the year and come back up to upstate New York for the other part of the year. They have to be a full-time occupant of the home. It's got to be modest and located in a designated rural area, that mapping that we discussed earlier, and then demonstrate a willingness and history of paying debts. And there is an asset limitation of 15,000 for non-elderly and 20,000 for elderly that applies. This wouldn't include retirement assets. So it'd be like savings, checking, maybe CDs, liquid type assets that could be converted to cash. This program is largely administered through our area offices. My underwriting staff here in Syracuse, they do the underwriting, but the staff in the local offices, they originate it, process it, and then we take care of the underwriting for them in the loan processing center. So they would contact any of these area offices if they were looking to get repairs completed to their home, or you want to refer someone to get repairs completed to their home. And again, I like to feature people and tell their stories. This is probably my favorite Section 504 home repair grant recipient of all time. This is Mr. Lloyd Gallup. As you can see here, he was a World War II veteran, and he lived in that same home for over 70 years when we came in to provide him assistance. Of particular note, this man never asked for a dime. It's typical of that generation, I would assume. He's very proud. He didn't want to ask for help. There was a flood that came through. He lived on a hill. But the members of this community in Ilion, they just adored this man. And, Catholic Charities, a GoFundMe page, everybody, veterans organizations, they all rallied around and said, if we don't fix his home because the foundation is compromised, he's going to have to leave here. It's just not safe for him to live here. And this was just a proud moment for me personally to be a steward of taxpayer dollars and be able to award a very small token of appreciation, $7,500 grant that we contributed to the overarching gathering of funding sources to give this man the absolute dignity that he deserved to age in place in a home that he called home for over 70 years after he came back from the war. And you could see we made it into a little it was around this time of the year when we did this. It was near Memorial Day, and we made it into a veteran appreciation because he didn't like the attention drawn on him. So we tried to focus on the fact that it was a thank you for his service, but it was really to kind of just celebrate that the community rallied around him and was able to let him live in this home. And so he was a great man. Unfortunately, it's been a couple of years, he passed away, but I always include him in my presentations because he's a perfect example of the very people that we help and should continue to help. So finally, here's some of our websites. I mentioned earlier in the presentation that we do business loans and we have community development loans. So if any of you are volunteer firefighters or you're active in your community and you're thinking, oh my goodness, this would be great. We're trying to expand our library and maybe USDA could help. Visit our website, take a look at what, our other program and assistance has to offer. We pride ourselves that we are community builders. We are your federal lender in these rural areas, that if there's something that needs financing, affordable financing, there's a good chance we might be able to help, but at least reach out and see if it's something that we can do, and reach out to me even, and I can get you in contact with the folks in those program areas that could kind of go over your proposal, see what you're looking to do, see if it fits within our, gosh, there's got to be over 45 different programs that we administer now here at USDA amongst all these program areas. And also deed property and income eligibility. This takes the mystery out of what the income limits are by program type. And for any of you that want program specific income sheets, we have like these outreach type flyers that depict what the income limits are by county. by program type. So the 502 program, I have an information sheet of what those limits are, the guaranteed and the home repair program. So certainly follow up with me and I can deploy those out to the group and you can have those on hand. And then, of course, that same handbook reference that I provided earlier, but more in the context of the guarantee program for any of the programs we've talked about here. There's a very user reader friendly handbook that accompanies each of these housing programs. And then for anything that I haven't covered and I haven't maybe provided as deep a dive as you're interested in, you can contact me directly. I can either assist or put you to the right person that can assist if it's maybe a different program area. Or if, as I've said to Joe and Brian and Sherry, as a follow-up to this session, if you're looking for more specifics on credit or how we analyze a guarantee loan or what the underwriting criteria is, I could get someone from the guarantee team to maybe follow up and provide some training as well. But I think if you go to our website, you'll see that there's a lot of great training that's out there for the guarantee program to support lenders. And then also you can sign up for those live sessions. So with that.
Jennifer, awesome.
Oh, thank you.
That's just awesome stuff. Really, really good. And the audience, if you have any questions, please get them together. We're going to address those questions right now. Now, thank you for your presentation on this. It's enlightening. I've learned a bunch of stuff here. We have a question from Harry Cooper. He says, our Habitat group does have critical repair. Working with borrowers, could we use your funds and our labor on some projects?
Yes,
So,
great question. Great question. So I'm actually meeting with the Habitat affiliate. Well, we're doing a prep meeting today to meet with a Habitat affiliate in Buffalo. But that's just one of dozens of Habitat affiliates that we actively work with. So we routinely use both our direct loan program and our home repair program with various Habitat affiliates. So the best model that works really well here in New York and anywhere in the country for that matter, is we come in as an end loan financing piece. So we actually support the affiliate. For those of you who are involved in Habitat, you'll know that some affiliates really struggle because of the mortgage lending laws. They don't have volunteers. Some affiliates are so small that they don't have qualified lenders to pre-approve their customers and get them determined eligible. And they can't act as lenders anymore because they just don't meet that criteria. So we've kind of fit that bill for them is we pre-approve them, we pre-screen them, we determine who might be a good fit for their family selection. So they know going into it, okay, we need to select this family because they are USDA eligible, or maybe they work with another product that they have a relationship with. So we function as their pre-screener, their originator. And then if they select that family, they build the house. And then when it's getting close to completion, that's when they go to full application with us. And we come in with the end loan and Habitat sells it to them for whatever they decide is a fair price, whatever sweat equity they want to give them. And we become the lender. So it gets them in the business of more house building and family selection. And we become the lender, we become the servicer, so they don't have to do that as much and they can focus on their core mission stuff and not so much the weeds of the lending. Oh, Brian, you're on mute, I think.
I knew I was going to do that at least once. I mean, that's great for us to know from a referral standpoint. Also, it's connecting the dots between customers because a lot of us are client-facing individuals here, and having this education, having the knowledge of how all these things can be stitched together. That's super. Jim Bopp has a question. He was wondering if you could talk a little bit more about the USDA renovation program, First Mortgage.
Sure. So I'll give you a typical example of like a rehab type program that we would do. So I'll do it in the context of the direct program, because that's what we do most every day, because we administer the direct here. So we have networks of not-for-profits that work in partnership with USDA. So either we might work with one of those partnering agencies because they have a purchase acquisition that they want us to finance. They might come in with some of the rehab money, whether it's CDBG or, home funds, wherever they're getting their rehab source funds. But maybe it's not going as far as they want it to go, or they just want to spread it further. So we will make the client eligible. We'll do the full underwriting because we make the person eligible for the program first on the direct side. And then we issue them what's called a certificate of eligibility. So they know how much they can afford with the subsidy that they qualify for. So if they're looking to do a rehab acquisition, we'll go ahead and order an as repaired appraisal, sometimes factoring in the work scope that the not-for-profit gives us, or maybe the homeowner works on their own to give us. And we give that to the appraiser. The appraiser obviously ordered us an as repaired appraised value. And then we will build that amount needed as repaired into the loan above the purchase price, close on the loan, so they don't have to do all the repairs in advance. We can close on the loan. We put the money in what's called, that's earmarked for the repairs, into what's called a supervised bank account. And as the work is completed through this escrow account that we have joint signature authority on with the homeowner, we pay the contractor with their consent. Now, the partnering agencies, they control their own money. So if it's partially funded with USDA and maybe partially funded with a not-for-profit, we work out what money it gets administered first. But between us and the partnering not-for-profit, or may sometimes just us alone, we pay the contractors that way. But there's
Awesome.
no there's no first close, second close on those. We close on it and we
Gotcha.
administer the rehab through an escrow.
And that's for direct, or is that also included with a guarantee?
The guarantee can do that as well, but it's really up to the lender if they want to administer such a program. Some lenders, they
Gotcha.
just want to sell it as soon as they close it. They don't have the stomach, or they don't have the business interest of holding escrows and doing rehab type stuff. They just want to close it and sell it, and that's fine. But for those that maybe are interested in doing the rehab side of things, they can certainly hold it and administer the rehab piece and order on their own an as improved appraised value.
Okay, just another follow-up from Jim Bob. So he works with a mortgage company. They are a USDA servicer, investor, and a renovation loan servicer of FHA, Freddie, Fannie, and VA rental loans. How would we be able to own the loan and manage the draws? That would be important to him.
Yeah, so I don't want to give, I'll be absolutely honest, I don't want to give misinformation on the guarantee side of things because we don't deal with that day to day. But if he wants to contact me directly, I could get him in contact with someone on the guarantee side to specifically go into those nuances of how that could be accomplished.
Yeah,
I
that
just
makes
want to
sense.
err on the side of caution. I don't want to give misinformation.
No, that's fine. He says thank you. He'll contact you
Yeah,
later.
absolutely. Sounds good.
That's excellent. So I wanted to ask you about LTV and CLTV. USDA is 100% financing maximum. There is no higher CLTV if there was a grant, a second lien grant, right? Just to clarify.
That's correct, both on the direct and the guarantee side of thing. As long as it's an affordable housing grant, it doesn't impede the ability for the homeowner to make the mortgage payment, and it's subordinate to either us or you all as the lenders. Absolutely. Because a lot of times, as you all know, as lenders, you can do a lot of rehab, but it doesn't always translate into increased value. Yeah. So especially when some of our partnering not-for-profits are doing lead-based paint remediation, it needs to be done because it's federal funds sometimes on their end or on our end, but it's not contributing to the value. So you're going to see combined LTVs that, exceed that. But most of those affordable products, they're soft, silent, forgivable, so they fall off over time. So we're not concerned as long as it doesn't impede the homeowner's ability to make their mortgage payment either to you all as lenders or to us on the direct side.
Gotcha. And just in the same line of questions, as far as seller credit for closing costs and taxes, I believe you allow up to 3%, 6% for that?
6%.
6%?
6% on the guarantee side. Yep.
Mhm.
Direct side, we don't even have a limit, but you know, the market usually drives, you know, what.
Correct. The appraisal drives it, basically. Yeah. As far as funding is concerned, I know there's federal funding involved with your programs. Is there a specific point in the year or the calendar where funding becomes an issue for some of the subsidized programs? We had a question about subsidized programs and funding.
Sure. So on the direct side, well, let me start with let's start with the best news. The best news is on the
Yep.
guarantee side, there is phenomenal congressional support for the guarantee program. The way that fee structure is set up, it's budget neutral. It costs the taxpayers nothing to administer the guarantee program because of the way that guarantee fee structure is set. So there is more than enough money to carry this program without interruption all year long. There's like maybe a week or so when you're going from one budget cycle to the next, where maybe there's like a gap waiting for the appropriations to come through, but it's limited. I don't even worry about it because it's just it's a budget function at that point. It's not a funding, a congressional support and funding situation or concern. On the direct side, it's a little different because that is not budget neutral. So we do have to wait every year to determine where our level of funding is. I can tell you in the 32 years that I've been here, it's both the programs, the direct programs that I talked about, both the guarantee or the single family direct and the home repair 504, they've been consistently funded throughout my career. There's ebbs and flows. There's years where there's some a little bit more, a little bit less. This actually is a year where there is a little bit less on the direct side, both the home purchase and the home repair. I can tell you that New York, we're a bigger state in terms of population and how the formula allocation goes. We are still pushing out certificates of eligibility. We are still funding applications. And if there is like a small period where we have to park them a little bit, like put them on maybe a wait list, it'll just be a few months probably until the new funding cycle goes. So I would be wrong to say that we are not subject to budget cycles, but this year is a little bit abnormally. Normally, like last year, we could fund applications all year long. On the home repair side, the loan program, there's plenty of money to keep us going this year, definitely for sure, all year long. The grant side, that's obviously very it's very popular. Grants are popular, so we might run low before the end of the fiscal year. But again, we keep processing, we actively engage with the public, we get the applications in and we keep them moving. We do not have backlogs right now here in New York for this budget cycle. And I can't even remember too much of a time where I've ever had to backlog and waitlist applications on the direct side.
Gotcha. Makes sense.
There is a demand. There is a demand, particularly in this market. And we're doing our very best to make sure that we can continually meet that demand throughout the year.
Speaking of demand, have you noticed a trend within the USDA space over the last couple of years of more focus being put on affordable housing and how USDA has been able to assist with home affordability? Have you noticed an uptick in volume, if you will, closed loan volume?
Oh yeah, absolutely. Absolutely. So we've seen definitely more applications coming in, particularly in the past couple of years, both on our home purchase and home repair side, particularly on the direct, more so on the direct, I would say, just because, you know, there's a need for the direct lending. The interest rates are a little bit lower on the direct side, a lot lower on the home repair side of things. So there is a demand on that. And we've been able to meet the demand up to this point. We're hoping to continue to meet the demand as deep into the summer as we can, but the reality is, like I said, the demand is probably going to outstrip our funding levels at some point this summer. And then we're just gonna have to pick those back up when we get replenished with next year's budget, which comes in October.
Gotcha. And direct, just for my personal clarification, that is 50% of area median income, low to very low income individuals. Is that?
The direct home purchase program is actually, they're banded. So for example, a household of 1 to 4 is the same income level, whether you're a household of 1 or a household of 4, and a household of 5 to a household of 8, that's banded as well. Okay, depending, and it varies by county. Because it's banded, it's not a hard 80% of the HUD median, but it's largely 80%.
80%.
That's the
Okay.
baseline of it. I mean, if you're looking for, like a general idea of where that falls, as a rule, low income is considered roughly 80%. Very low is considered 50%,
50.
but we do band it, so it's a little more generous than a true 80 or 50% for the direct side.
Gotcha.
Very low is only applies to the home repair program. The purchase side is considered low, and generally the guarantee program is low and moderate.
Okay.
Mhm.
Excellent. And for all the lenders out there that are focused on CRA compliance, this is a pillar. Having a product like this is a pillar to CRA compliance, as is a few other programs out there. But this is what we're doing here. We're educating you guys on the products, and a whole bunch of other stuff as we see things come up that we feel would be relevant. We'll keep doing these presentations and these webinars. I'm good with questions. I don't see any other questions in the chat. Sherry, if you're there, I'm sure you'd want to opine a little bit. Any questions from Sherry Eccles?
I do not have any questions. I just want to thank Jennifer. I think this presentation was awesome, and I love all the human stories and making it real for all of us. And you guys do amazing work. I'm so thrilled that you were able to come on and that we're able to tell more people about the good work you're doing and how we can partner with you.
Absolutely.
100%.
And I just want to emphasize too, to the lenders out there, the purpose of our direct we are, even in the guarantee program, we're not here to compete with banks. We're here for those folks that you all can't reach, that are not bankable. And we want you to view us as a partner for those folks that maybe you really want to help, because first and foremost, you're human, you like to provide great customer service, so you can't always get everybody into a home, and we want to be that alternative so that maybe they get into a home with us, and maybe when they outgrow our program, they no longer need maybe the direct program. We have to encourage them to refinance eventually. So by these relationships, they will go back to you all to either go to a guarantee loan to graduate out of the direct program, or maybe a conventional loan someday when they outgrow that house and they've built some equity. So know that this direct program is in direct partnership with our lending community to reach those folks that you all can't. So
Awesome. Jennifer, thank you so much for your time and your expertise in this space. That's wonderful. And thanks to everybody else for being with us today. Today's webinar is going to be posted soon on our YouTube channel. If you want to find that, you want to search for New York Mortgage Bankers Association on YouTube to view this and other recent educational webinars that we've presented for our members and our guests. Please join us again for the next Affordable Friday webinar. We're working on something for June, and we'd love to have you back.